Let's start with the markets as we always do. We are still amid this first full trading week of 2026. And so far, what worked in 2025 seems to be what's working in 2026. Joining me now with more is Michael Rankin, Senior Market Strategist for the New York Stock Exchange. Michael, good morning.
Good morning. Thanks for having me, and Happy New Year.
Happy New Year. Great to have you on the show. How is this new year setting up from your viewpoint?
Yeah, so look, we're off to a very solid start. We have 3 consecutive days of gains for equity markets. We're kind of setting fresh record highs. The Dow Jones Industrial Average is about 1% away from 50,000, right? That big kind of round milestone mark, right? And we've seen kind of very solid performance. Kind of a broadening of the tape that kind of a lot of people have been hoping for. We started to see signs of that in Q4 of last year, right? And we have a pretty positive setup. So if you think about kind of the backdrop, we have the fiscal impact of some of the administration's policy shifts that we saw last year are going to start to start to impact the economy as we head into this year. We're looking at kind of mid-double-digit earnings expectations growth for kind of mid, small, and large cap companies, right? So you have a very positive earnings backdrop, and you have the Federal Reserve, as you pointed out, kind of also cutting rates at the end of last year, and you'll start to see the lagged kind of impact of the rate cuts that we've seen over the last year and a half start to impact the economy.
Let's drill down on these rate cuts a bit. So the Fed, we know, has a dual mandate, maximum employment and contained inflation. And this week we already have gotten a look at the employment picture, but that non-farm payrolls report on Friday usually does take all of the headlines. How is the jobs picture looking to you? Yeah,
so I mean, we've clearly seen a slowing in hiring, right? But we're also not seeing kind of these large layoffs, right? So it's kind of this low hiring, low firing, kind of sort of backdrop. We'll have to see how that progresses. We didn't see, right, with the government shutdown, right, a lot of that data is still going to be a little bit sloppy as we look forward. This morning's ADP report, right, showed an increase of 41,000 jobs. Notably within that, if you remember back in November, there were very, very big declines in small businesses where they cut 120,000 jobs. That bounced all the way back this month, right? So that's a positive. We did see a little bit of a moderation in hiring, kind of in large businesses, right? But, at this point, if you believe in this idea that you're going to see a reacceleration of the economy, that should also ultimately help the labor market as well.
Okay, 2025 trades, technology did lead the way most of the time, despite some profit taking at the end of the year. 2026, do you expect the same theme?
Well, so look, I think, you can't really get away from the AI theme, right? And it's such a big driver of U.S. markets particularly, but it's also, as you can see in just the performance to start this year, it's a very big driver in pockets of Asia as well. And if you look at kind of how Hong Kong and the Kospi in Korea and South Korea and Japan have performed to start this year, right? You're still seeing a lot of strength, kind of related to that tech trade. So I don't think that tech trade is going to go away, right? I think you're already starting to see that trade kind of evolve, right? Where with kind of the Alphabet's or Google's TPUs kind of bursting onto the scene, right, and showing some competition to NVIDIA. Markets are trying to search out kind of the winners and losers, kind of within the infrastructure and kind of the supply chain within technology, trying to figure out those winners and losers. But I think it's going to evolve even beyond that, where markets are going to really look to see kind of companies implementing the technology, showing how that's increasing productivity and helping kind of the bottom line.
I do want to talk about the Consumer Electronics Show currently underway in Las Vegas, and we've seen headliners at this event like AMD's Lisa Su, NVIDIA's Jensen Huang. We're going to be speaking with Oshkosh in just a moment here after it took home several innovation awards from CES as we get started this year. Big picture, what matters at CES?
Yeah, look, I mean, it's an exciting time, right? It also happens kind of at a point where we're ahead of earnings season, kind of within the U.S. equity markets, right? So, it does capture a lot of attention. Well, we heard from kind of the big heavy hitters within the tech industry, kind of on giving their keynotes on opening night. Jensen Huang, kind of unveiled the new Vera Rubin, right? There's a lot of focus on autonomous driving, right? Robotics, right? My son will be very excited. They have smart bricks coming from Lego, right? So, he'll be excited about that. So, it's an exciting time. time, you continue to see, just kind of this innovation that's, kind of happening within technology, and how AI and is starting to also impact kind of the physical, aspects of AI.
Seasonal's always something that we talk about here in January, whether it's the Santa Claus rally, the first 5 days, or even the full month of January. How is that shaping up?
Exactly. So those three indicators kind of make up the January indicator trifecta, right? And so the Santa Claus rally just wrapped up, or kind of the Santa Claus rally, kind of that measurement period just wrapped up on Monday, right? The S&P 500 ended a couple points lower. The Dow did end higher, but of the three indicators, that does kind of tend to be the least good for predictive, kind of how markets kind of perform in the year ahead. This is the third consecutive year where the S&P 500 ended lower, and if you think back to just the last 2 years, right, we had pretty solid gains. Now, the first 5 days, we've started off the year with very strong gains across the markets. We're up for 3 consecutive days. We'll see how today shapes out. So, the first 5 days looking pretty solid, but I think that, the most indicative is kind of how January tends to play out, right? And if you look at, that first 5 days in January, when you have, those indicators are higher, equity markets tend to be higher, kind of in the double-digit range, and up a little over 80% of the time. So they are, have been pretty good, kind of predictive, kind of in signals of how the rest of the year might play out.
Quickly on volatility, it's something that market watchers have been noting on this show. What is your expectation for volatility this year?
Yeah, it's interesting because we've seen volatility get compressed quite a bit, right? Especially, you had this, kind of vol spike in kind of Q1 of last year, and then kind of on the back end of that, there's really been this compression of volatility, right? There's a lot of headlines that are kind of out there, right? We just saw kind of Venezuela. Markets have largely shrugged off a lot of the geopolitical headlines that we've seen over the last couple of years. We have the IEPA. Kind of Supreme Court ruling potentially on Friday, right? That could cause some volatility. Look, I mean, I think there's some risks out there, but like with this, I think there's a bit of a structural shift in terms of kind of how important kind of retail is, and we're seeing that now in kind of in markets, and as we turn the corner, right, kind of we've seen a lot more retail participation, and that's starting to rival some of that institutional flow, and I think that's something that's going to continue. It's something I listened to Citadel talking about yesterday on a conference call.
All right, Michael Ranking, Senior Market Strategist for the New York Stock Exchange, joining us here as we kick off 2026 in the first full week of trade. Michael, thank you.
Thanks for having me.